Thanks everyone for having me. It's wonderful to be here. I called the Bay Area home for almost 11 years, and this time of year it definitely beats tropical Pittsburgh, Pennsylvania, which is where I flew in from. Again, my name is Adam Miller. We are going to be talking a lot about why the best strategies are counterintuitive and non-intuitive, right? There are so many different things that we observe every single day, whether it's a piece of creative that we don't think is going to work, a marketing strategy, an investment, a project, even an entire company thesis that we just give zero probability of it actually working. And then what happens? It does. And then we're all forced to re-underwrite exactly what we thought of that strategy in the first place. I'm here to tell you that isn't random. There are whole frameworks that we can build around that kind of thinking to actually help us develop a better framework for how to handle those situations in the future. And that's because many of these non-intuitive and counterintuitive strategies are contrarian in nature. Now, don't confuse being contrarian with being non-conformist, right? We all know these people, non-conformists. They want to argue with you just for the sake of arguing with you. That's not what contrarianism is. Contrarianism is much more around building deep insights that deliver asymmetric upside relative to the risk. And the reason this might sound really familiar is because contrarian thinking is really just first principles thinking. If you were to draw a Venn diagram between first principles thinking and contrarian thinking would be wholly contained inside of first principles thinking, even if not all first principles are contrarian in nature, right? And again, I already alluded to this, but really you're looking for these asymmetric returns by leveraging deep insights as early as humanly possible. Let's throw out a really quick example. Take a company like Airbnb, right? At face value, this idea of having somebody stay in your home while you're still there and paying you for the right to stay in your home is absolutely crazy. Has no right to work. But if you really look a little bit deeper, you understand, okay, they're not only saving somebody money, they're adding supply into a market that is probably lacking in the first place, right? In fact, the very first use case for Airbnb, why they call it Air Bed and Breakfast, is because there was a design conference in town and all the hotels were booked. So what did they do? They allowed people to stay with them. These were the original three co-founders. So it was Joe and Brian Chesky, and they just charged people a small fee. Well, those people also got a deal in exchange for that. There was a value exchange there. My point is, there are all these kinds of examples that you can look at on an ongoing basis and understand deeply so that you don't look at these again in the future and say, that's just crazy. Why would that ever work? Almost every single presentation I give, I have to admit this, I try to find some way to squeeze a Charlie Munger quote into it. If you know who Charlie Munger was, he's the former vice chairman of Berkshire Hathaway, the venerable investment institution, and Warren Buffett's right-hand man. He passed away at the ripe old age of 99, and even into his 90s, he was full of these incredible quotes. So I'll just read this one real quick. The way to win is to work and hope to have a few insights. You're probably not going to be smart enough to find thousands in a lifetime, and when you get a few, you really load up. It's just that simple. Classic Charlie. And what I think he's pointing out here is that really you have to start with an insight. If you have this insight, no matter how, again, crazy it might seem, it actually might be the right insight that you can then go and leverage for future growth. To bring this back to technology, and probably somebody that you're far more familiar with, Peter Thiel. Peter Thiel is a very famous contrarian and again, very celebrated amongst tech circles. And he asked this question amongst other questions, and he points out these questions in his book 0 to 1. What important truth do very few people agree with you on? And I just want to break down this question for a second. So he asked, what important truth? In other words, what indisputable fact do very few people agree with you on? And what's so important about this question is that he's literally asking you, what do you believe and what can you prove that if you were to ask 100 people, over 50% of them would say that's not true, even though you can prove it, right? So there are all these really interesting insights that happen whenever you start asking questions like this that you can then go and leverage to create whole companies and whole strategies around. So one such example of this is a company called, was called Machine Zone, later rebranded to MZ, and then was eventually acquired by a company called AppsFlyer. I'm going to date myself. I've been doing this for a very long time. Take a look at this face. This is what happens when you stay in technology and marketing for too long. You age like a sitting US president. When we look at our marketing, you have to think about edges. What is my edge over the marketplace? Again, this is a quote by Gabe Layden, the CEO of then Machine Zone, then MZ, then AppsFlyer. And this was around 2016 that he said this. In 2016, Machine Zone was one of the biggest advertisers, hands down, in the world. They took this gaming company to a $5 billion valuation by running 400 KPIs, 50,000 Facebook campaigns concurrently, generating 20,000 creatives a week. If those numbers sound huge, they are. They actually got so big that they turned their entire operation away from gaming and into more of an ad platform. That's how good they got and the kind of scale that they were operating at. They literally turned a gaming company into effectively a DSP. Now, eventually they sold that company to AppsFlyer, and now AppsFlyer is still leveraging those assets with really, really great effect. They're incredibly successful with those assets. But what I love about this phrase is that from early on, they were already thinking about what sort of insight, what kind of edge do we have that we could actually go and turn the entire market in our favor. And that's exactly what contrarians do exceptionally well. Another great one from Vlad, the CEO and co-founder of Robinhood. Great companies are built by people who are not afraid to be different. Again, their insight was, we want to take a lot of the institutional trading mechanisms that are available to Wall Street veterans, and we want to democratize them for everyday investors. And that's exactly what they did with Robinhood. Think about it. You can now trade options in the palm of your hand. Half of you are probably checking your stock quotes right now. You're wondering what NVIDIA is trading at. And you can just see how powerful that concept is when it's really applied at scale. So now we've talked about what exactly contrarianism is. We've talked about some very famous people who are very contrarian in nature. Let's actually talk about what it means for the people that you're actively advertising to, consumers. So consumers tend to gravitate to dissonance and novelty because it really drives this intrigue. It drives a lot of interest, especially when consumers start to see things that look a little bit out of place. And the brands that can really expose consumers in this way without necessarily putting them off, they're usually drawing on some sort of very deep insight. Again, really going back to first principles and contrarian thinking. Anybody remember this one? Right? 60 second Super Bowl ad from Super Bowl 56. You do. This is literally nothing more than a bouncing QR code for 60 whole seconds on the world's biggest stage, right? And at first, everybody was caught off guard a little bit, right? It's like, this is a branding moment, right? We're expecting a Doritos commercial, we're expecting a Pepsi commercial, and we got this, which just had a really funky little tune playing in the background. That cost them $13 million, right? And Coinbase, for what it's worth, the CEO, Brian Armstrong, is one of the greatest contrarian thinkers out there. He is really ahead of its time, incredibly sharp. But he obviously greenlit this, and they spent $13 million on 60 seconds. Just try to comprehend that for a second. Well, if in that 60 seconds, they drove 20 million visits to that landing page, right? At a 65-cent cost per visit. And that's just within that 1 minute. You can best believe that that spot continued to live on, and they continue to drive down that cost per visit. I challenge anybody in this room to deploy $13 million in 60 seconds with that kind of efficiency, right? It's incredible. Another great example, for anybody here who's in e-commerce or in DTC, this is literally a $1.4 billion brand for water in a can. But why does it work? Because the founder, Michael Cesario, sorry, I had to remember his last name, he was actually a designer with the Warped Tour. Now look, I will say I was a Warped Tour kid. I will totally reminisce with anybody about pop punk whenever you're ready. But he was a designer for the Warped Tour, and he saw that all these kids were drinking water from Monster Energy cans because they loved the brand so much, but nobody's gonna chug Monster Energy all day on a 90-degree day. So what they do, they would refill them with water. Because they love the brand so much, they kind of love the can, it was very punk rock aesthetic. And so he realized that, okay, I can actually go and build an entire brand around this, and he actually originally started distributing it to tattoo parlors, barbershops, places where, quite frankly, young hip kids hung out. And now they've propelled this into a $1.4 billion brand, and it's just water in a can. Well, I couldn't in good conscience stand up here. Not sure if my video is gonna work. That's all right. I couldn't in good conscience stand up here, being from Pittsburgh, Pennsylvania, and not have at least one Duolingo example. So I drive by Duolingo's office almost every single day. And one of the most fascinating things about Duolingo is how powerful their social media presence is. It is second to none. Their TikTok has over 330 million likes. And normally I'm not the kind of person to analogize likes to success. Their consumer base is also growing 50% year on year, after years of pretty sluggish growth, quite frankly. Now, some of that is AI driven, but that just makes the product better. It doesn't actually get more people into the product. People are starting to come back to the product more often. They're getting more consumers into the product. And that's because their social game is on point. One of the most interesting things about social media that I certainly missed in the early days was I thought it was all about cropping these perfectly produced 60-second, 30-second, 15-second ads. Turns out that's actually the losing strategy. In social media, people want to be spoken to and spoken with. They want to be entertained. They want to find humor. They don't just want to be informed. That's what they tapped into. And again, if you could see this video, it's pretty funny. It's basically the duo mascot, somebody in the owl suit basically chasing somebody around an office. I mean, they probably produced the thing for 15 cents. That's probably how much time they actually spent on it. But literally, they're producing stuff that is getting picked up. I mean, the video that I was going to show, 175,000 views, over 1,000 comments, 32,000 shares. And it was just posted 2 weeks ago. So just sit with that for a second. Almost zero cost to produce, and they're driving that kind of engagement. Again, great first principles, contrarian thinking. So now we've talked about what contrarianism is. We've talked about what it means for consumers. Let's actually talk about what it means for you. Like, ultimately, how can we use this in our day-to-day operations? And there are some really defined ways. The biggest way is to defeat your pre-existing biases, right? The whole point of first principles and contrarian thinking is actually to second guess yourself and make sure that what you're saying and doing actually squares with the outcome that you're trying to drive. And I put this in quotes, but essentially there are a lot of things out there that we attribute to being very sophisticated that actually don't deliver the outcomes that we want. So you can consider this the hot takes portion of our presentation. First, overcuration and the quality premium fallacy. That's a big way of saying sometimes the juice is not worth the squeeze. You see a lot of people out there trying to produce a better widget without being able to charge more for that widget. And I'll show you a couple of examples with this. I point out overly managed marketplaces only because I spent a lot of time in marketplaces. A couple of those were routed off previously. I spent time at Turo, Postmates, Uber. I can tell you, if you're going to go and curate your marketplace, if you're going to have a managed marketplace, you better be able to charge a lot more for it. And the winners in these cases often figure out how to just manage a marketplace as it blooms, right? You've heard the phrase, let 1,000 flowers bloom. That's essentially what the best operators do. They let the marketplace scale up, and then they realize this is a problem to be managed at scale, not to be managed before it scales. Case in point, Turo versus Getaround. So I spent 5 years at Turo, and the company is now, and again, they're S1, revised S1 is out there, so you can go and look these numbers up for yourself, even though they're not a publicly traded company. But they've just recently scaled to a 936 million trailing 12 months revenue versus Getaround's at 76.9 million, right? Order of magnitude difference, right? Greater than order of magnitude. And the reason why is because in the early days, Getaround was set on this idea of outfitting every single car with a device. In other words, you could not onboard your car to their platform unless they outfitted it with a device that they could then use to remote lock, unlock, start, or even kill the engine on. Whereas Turo said, you know what, we're not going to do that. We've tried that, that's a losing proposition. We're just going to let 1,000 flowers bloom. If you have a car, you can list a car. Go ahead. And then you know what? Then you actually go and you manage the trust and safety component of that as the platform grows. And I remember at one point realizing that Turo was in 7 countries, Getaround wasn't even in 7 cities. And that's why Turo won. Another example, and this is actually the inverse. So I did spend some time at Uber. And this 25% US market share is inclusive of Uber Eats and Postmates. But the reason why DoorDash won the market is, again, going back to this first principles thinking. They realize that you actually can charge a premium in food delivery. Now you might be wondering, okay, food delivery is kind of a commodity. Why would you be able to charge a premium? And that's because the end product that you're actually delivering is premium, right? So in DoorDash's case, they actually bought a company called Caviar. Caviar had one of the best food selections out there, and they typically specialized in high-end restaurants. Well, the order differential, or at least the average order value differential between these two companies was night and day. DoorDash went out and looked at the suburbs, where you're typically seeing orders for 3, 4, 5 different people in a single order. So not only do you have more orders, but then also the kinds of restaurants they were ordering from were of a higher quality. So you're talking about a differential of hundreds of dollars for DoorDash versus maybe tens of dollars for Uber and Postmates. That's why DoorDash was able to scale up so fast. And then Amazon. Funny enough, I had a conversation with somebody earlier today about Amazon's third-party marketplace. The reason why people are so, well, I shouldn't say the reason, but the reason why Amazon continues to leverage third-party sellers is because it's unbelievably profitable. That $152 billion in third-party seller services they now take in constitutes almost 25% of their total revenue. I just don't think most people understand what a staggering amount Amazon does in third-party sellers, even if it frustrates some customers. Anybody here actually try to return something from a third-party seller? It's impossible, right? And sometimes you don't even get the product that you think you're getting, right? Maybe it's been opened before, maybe it's the wrong size, maybe they don't even send it at all, right? We've all been there. But the reason why Amazon continues to lean into this is, again, it's a problem to be managed at scale. You don't try to manage it before it scales. The second bias, measurement precision paradox. This is one, again, I've talked to many people about today. Advanced attribution, I was describing it this way. Often interesting, maybe useful, sometimes actionable. And the reason why is because there are trade-offs to be made when you're building measurement and attribution solutions, right? There's multi-touch, there's last click, there's everything in between, right? What I find happens very often with some of the brands that I've worked for, work with today, is that they're always looking for more sophisticated attribution, but without a why to it, right? If you're a company who's building multi-touch attribution, stop and ask yourself, what am I solving for? Again, first principles thinking. What am I actually solving for? You might build this thing. Maybe it's very broad. Maybe it captures every single signal, and you have this vision in your head of this perfect symphony of measurement and attribution. In reality, what's happening is that you're adding complexity, right? You're adding complexity, you're adding expense because you're now having to capture all these signals. And the real question is it actionable or is it just interesting? In many cases, last touch attribution is actually the single most actionable attribution model you could ever have. Why? Because it's very simple. It's very simple. You're looking at these different pathways and saying, okay, where should I go and place my bets? Where should I go and put my dollars? What should I go and scale up? What should I go and scale down, right? Hyper actionable. And I can tell you we've had this debate numerous times, especially at Turo. And you know what it turns out? We got 90% of the result from last touch attribution that we would have if we had gone and endeavored to build a more expensive multi-touch solution. So again, don't overbuild. If last touch does the job, do it. Third bias, the price over value fallacy. Again, this has some tangents to the first fallacy that I was talking about, which is that you need to actually go and create value. Price is typically not a deterrent to people purchasing your product. It's usually the perceived value that they are receiving for purchasing your product. And typically, if your product is a little bit more expensive, you have an opportunity to then go and increase the value component such that your consumers actually feel like they're getting more for their dollar. Case in point, and I don't think there's actually a better illustration of this, than streaming. Streaming for over a decade has been exorbitantly cheap relative to the amount of content that we all get, right? There's all this intellectual property that's being thrown off by brands like Netflix, right? Now with Squid Games. Disney certainly has its share. If you're a Star Wars fan or a Marvel fan or whatever, right? It seems like Disney now owns everything. But what's really a hallmark of a great business and real value add is when they can raise the price and people buy more of it. That is just mind-blowing. That is a fantastic business. And since 2019, Netflix has actually increased the price of its standard plan by almost 29%. And guess what? More customers. 32% increase in US Canadian subscribers. That is incredible. And that just goes and proves the point that they are really adding a ton of value. So again, it's value, not price. The good news in all this is that you can actually learn to be a contrarian and first principles thinker. And if you operate from these first principles and you leverage those correct insights, you can unlock a ton of opportunities. Again, if you're gonna be a good contrarian, you not only have to look for asymmetric upside, you have to act early, but then you also have to make sure that you're thinking about this in the right frame of mind, such that if you are successful, you're gonna have huge upside, and if you're not, your downside is gonna be pretty small. A couple of quick takeaways. Do what you should instead of what you're supposed to. Now, I'm gonna unpack that in a second. When you do what you should do, that means that you are operating with first principles in mind. That means that you are actually going and doing the thing that is going to create the outcome. Supposed to usually implies some level of conventional wisdom. And it's usually unconventional wisdom that actually goes and grows companies. So remember, always do what you should do, not because you're doing the thing you think you're supposed to. Asymmetrical return potential, I just talked about that. Place bets with a huge upside and a very small downside. Leverage the insights to your advantage. Again, all of these contrarians are operating with some sort of existing insight, and they need that deep insight to actually go and unlock the opportunity. It's an insight that is usually particular to them. I always get a little bit concerned whenever I see companies out there looking at competitors and saying, well, they're doing that, and they seem to be successful. It's a fallacy, right? Just because they're successful and they're doing something else doesn't mean that that is actually the strategy that is creating their success. But you see that a lot. And then last but not least, when in doubt, simplify. Just make things simple and tangible and actionable. That is what drives outcomes, and huge outcomes at that. Again, in very Charlie Munger fashion, I will leave you with this. Mimicking the herd invites regression to the mean. Charlie was a fantastic investor, and I know what you're all thinking, like, what does investing and marketing actually have to do with one another? The answer is everything. Investors allocate capital and resources that capital ultimately buys. You as a marketer and as a technologist, that is what you do all day, every day. You are building a portfolio of channels in many cases, using available capital, and then you have to allocate resources to then go and optimize those channels and create outcomes. It's the same difference. Thank you.